that last measured move up. Now let's move down to the daily to see where we are in this trend. We came back into the 75.61 and have since then sold off. We obviously blew through target, which means we are moving in a series of extensions from previous low to new low. We held and actually front run a bit the extension level of 74.16s today at our high today. We were actually buyers of the Eurodollar at the similar Eurodollar extension, and this is the extension that held yesterday at this level. See how it held the 61.8 right there, high to yesterday's high, held or yesterday's low. This is on the Dixie. It's low to low. We held that extension level. Now, because we blew out targets and we're holding extensions, now we're making a series of extensions lower. Invalidation here is 74.27. So that's our bearish above, bullish above, bearish below line in the sand for the Dixie is the 74.27. If the 74.27s break, 74.30s we can call it, we have the ability for the Dixie to rally all the way 50% back into the 74.80 level. So really, our two levels are the 74.80, but before then, the 74.30 level. 74.80 would set up the next short, and not until you're back above 75 can you truly buy the dollar on an hourly time frame at a 50% pullback. So that's what I mean when I say the trend is down until it's not. And obviously, we've taken a look at where our probable targets are, and you need to consider for a fact that the dollar is likely going to its 2009 lows. I also wanted to bring up the S&P 500 because a lot of people have been overly bearish on this over the last several years. While this is loading, I'm loading the weekly chart actually. Maybe it wasn't the best thing to do, but I believe we possibly could have, and I showed this count last year, actually last year after the flash crash, right around when we were making the 1,000 lows. You know, that was in July, I believe. A lot of followers on what's it called, on Twitter kind of laughed at me for this count, but I have us completing a massive wave 1 and then an A, B, C flat pullback. Now, if you consider for a second that this is a large wave 1 and the S&P started at 0, a pullback would be roughly 62.8. Our pullback front-rented the 62.8 level at the 666 level. So, if you set up your fibs, I believe it comes in at about a 78.6 retracement from highs. From high, basically divide. What the heck? Let's do it right now. So it's 666 divided by 15.2. So subtract that number from 100. What is it? Plus -1. It's a 57% pullback. So just almost 61.8. You know, within 5%. I think that's fairly good for such a long-term pullback, right? Anyway, this chart just suggests that we could possibly be in a massive wave 3 of 3 up. That would effectively be devaluing the dollar, as you saw the trend, to inflate the S&P 500. All right, so here it is on a daily time frame. Just to give you a count, this is not the same count. This count is slightly more, I feel, realistic if you want to suggest that the dollar will in fact rebound. And it has us in 1, 2, 3, 4 up in A, then our choppy flash crash down in B, and then a 1 2 1 2 3 4 complete, and we are now in an extended fifth leg of 3. So we're in wave 3 of 3 of 5 of 3 up, which will take us to new all-time highs. Right now, with price structure and the way everything is playing out and the just rapid devaluation of the dollar, this is about the only count I can come up with that at all fits our rational price action. So I'm going to move down to a 4-hour chart now so we can take a look at this on a closer time frame and show you exactly where support held and where targets are for the S&P 500. Okay, so we have had an impressive rally off the lows, a wave 1 of 3 rally, the start of a wave 3. That's the only way I could suggest this type of rally happening. Now, off of big wave 2 lows, when we start our next wave up, look at how each time up here it starts that big up day, and you really don't get a pullback at all. It just goes into extensions, so it's called. So the first pullback that held was just your 50% pullback here from wave 2 to wave 3. Wave 4 held 50% of length of previous wave 3. That called up a target of 1385s. Now, we also held the 50% literally held this one to just about the point to the tick, which brings up a target of 1363. And I do see us going to that target and likely blowing through with this much momentum on the uptrend. So quite bearish now risk appetite and quite bullish the dollar is about the only trade that makes sense. So everybody, this is I won't be looking for a substantial wave 2 pullback. Be some kind of sideways wave 2s now. So if this is a 1 2 3 4 5, would likely take us up into the 1450s, 1400s. So keeping in mind channel as well, channel resistance is not, is way up here at like 1450 to 1500 range, and that's a little convoluted. So trend is up until it's not, and until we break some of these uptrend levels, specifically 1239 and 1282 are two big levels bears would need to break to invalidate this uptrend. And now inside this there are of course micro uptrends, but we're not going to take a look at that, and inside the daily too. But trend is down for the dollar and up for stocks until it's not, and we're at breakout scenarios for both, or breakdown rather for the dollar, breakout for the S&P. So don't be a fool. Trend is in one direction until it's not. Alright everybody, I'll be back with you as price action develops.